Is the next crisis, though, likely to come from China, or is that the kind of the easy target?
I don't know if it's going to come from China, but certainly the world suffers under an unbearable burden of debt, which is yet to be addressed. And the only way, reasonably, that can be addressed is through inflation. And that's why I say I think inflation is coming. I think this Goldilocks economy that we're seeing at the moment is a very transient one. And what Jean was talking about, which is tightening across the board, really in almost every major jurisdiction, is going to have its effect next year, and growth will not be as great as people are anticipating for 2018.
So you think they're tightening too soon?
No, I don't think they're tightening too soon. I think they're tightening appropriately because this very low level of interest rates is causing a lot of distortion in economies, inequality in society. It has to happen, but it's going to have the effect of tapering off not just monetary policy, but also of economic growth. So I see economic growth being lower than expected next year.
And Jean, do you believe that inflation is definitely coming? There's not a kind of policy mistake in the making because we don't see inflation, it's lagging, but actually we're mismeasuring it.
So we think that the time to the next peak in this global cycle is measured in years and in quarters. So we think there's legs to this expansion. I don't think we've seen the inflationary pressures impact yet, and this is something we'll see before we get to the next peak. So I think this is coming. There has been some surprise on the downside this year. Inflation is like missing in action in some part of the world, as you were mentioning. I mean, there might be a measurement issue, but I think the bigger picture point for me is that this means no big change in policy setting. I mean, they're moving toward tightening, but it's going to be very gradual. And I think we're in a low-rate environment for some time, which has actually not much to do with central bank. I think there's very powerful forces at play, high debt levels, I think risk aversion. I think we're seeing, despite record highs in equities, the markets are pretty afraid of tail risk, and that's reflected in rates and the fixed income market.